Hello, financial freedom fighters. John Thorman here, and I'm excited to be back talking with you today about our series on the tax-free retirement plan. Full disclosure, I missed last week. I've been a little bit under the weather. We were traveling for business last week, and my wife and I both got sick, and she's convinced me that we have COVID, so we're at home self-quarantining and trying to get better. But I wanted to get back to you and continue our series. So today we're going to be talking, hopefully without too many coughing interruptions, but I want to be talking to you today in our next installment on the series about safety of principal. So if this is your first video, I'm doing a series on tax-free retirement plans. And when we talk to people and ask them what are the attributes or the characteristics of the perfect, the ideal retirement plan, what do they look like? What should they contain? So consistently, when we ask that question, the answers we get back are: 1, should be tax-free. 2, there should be good growth rates on the money. 3, we don't want to lose money. We want safety of principal. And 4, people want liquidity. They want to be able to access their money when they need it. And if you compare those 4 ideal attributes of the perfect retirement plan, you'll soon discover that the vehicles everybody's using, these 401k plans, these 403bs, these simples and SEPs and traditional IRAs, don't meet the criteria. And the interesting option that is available that most people don't know about does meet those criteria, and that's what I'm introducing you to. So today we're talking about tax-free retirement plan and how it provides safety of principal. And it's easy for a lot of young people to not know their history, and for older people to forget the carnage in the markets that happened in recent past. And so if you are approaching retirement or early into retirement, let me ask you, let's say you have $1 million in your retirement portfolio, how much of that can you comfortably afford to lose? What's that? None, right? Yeah, you can afford to comfortably lose none of that money in retirement. Here's the problem. Most 401k plans or tax deferred retirement plans that people have their money in, the money's at risk of losing up to half of its value in the next stock market crash. And that's not just some crazy, sensationalized headline. That's real. That's what has happened throughout history. Go back a little bit, 2008, from I think it was December of 2007 through March of 2009, that was the Great Recession, and the markets were off about 50%. Go back a few years before that, in 2000, with the tech bubble burst and then 9/11, the markets again were off about that 50%-ish. And go back a few years before that, in 1987, same kind of thing happened. So this is not scare tactics. This is just recognizing the patterns in our economy, in our markets, and wanting you to recognize them and to protect yourself, okay? Because it's not a function of if the stock market goes through a dramatic correction, but merely when. And if you're closer to retirement, you don't have 5 or 10 years to wait for your portfolio to recover. So safety of principal is a really big deal as you mature and get closer towards your retirement age, okay? So if we're looking for safety of principal, can we get that in banks, in a traditional savings account or a CD? Yes, we can. The trade-offs, of course, are that the returns are terrible right now, right? Can you get safety of principal in the traditional tax-deferred retirement plan options that invest in mutual funds and the like, things on the market, ETFs, that kind of stuff? Is that safety of principal? No, it's not, right? Your balance goes up and down as the market goes up and down. So the same thing with Roth IRAs. Those are invested in the market, and so no safety of principal there either. So your other option is these tax-free retirement plan solutions that we've got available, and they provide safety of principal. And it's incredible because it's contractually guaranteed. It's in the savings account contract where you will not lose principal that you put into the money, into the contract. Yeah, that's crazy good. So with these contracts, you're able to benefit as the markets go up. You go up with them to certain caps, okay? But when the markets tank, and they will, you do not tank with them. So every year, your gains are locked in. Typically, it's on an annual basis. Your gains get locked in. So let's say you put in $100,000, and in the first year, you get a 10% rate of return. So now it's at $110,000. That $110,000 is now locked in. So if the market drops 50%, you, in the next year, when you come back up for renewal, if the market's down 50%, you still have your $110,000. You're not losing any money. And then in the year after that, when the market comes back and it goes up, you go up with it. So it's always up or sideways, but never down. And that, folks, is the game changer, right? We eliminate the downside risk of stock market losses so that you don't have heartburn, so you can sleep at night, but it allows you to outperform the market over time because you're never digging out of a hole. You're never suffering these huge losses that people have all their money in mutual funds and in the market are going to experience. And that's a big deal, and that's really important. And I want you to understand the importance of that. Remember, Warren Buffett, 2 rules to investing. Number 1, never lose money. And rule number 2, never forget rule number 1. So if you're looking to accumulate wealth, number 1, you've got to be concerned about taxes. Number 2, you want to get good rates of return. And number 3, we just talked about, you don't want to lose money. You want safety of principal. And those 3 of the 4 characteristics of the perfect retirement plan are available in our tax-free retirement solution. And I'm excited to show you what it'll look like for you and your family and how you can take advantage of it. Don't be left behind. Get the information. Ask for a customized illustration to see what it'll mean for you and your family. Check out the description box below. There'll be a link to my online calendar. You can book a one-on-one. It's complimentary. We can talk about it, go over your options, but you've got to check this out. Like, it's just too important. You've got to include this, in my humble opinion, in your retirement plans. So that's all for now. I made it without coughing. Dramatic. I am starting to feel a little bit better, but I look forward to seeing you on another video real soon. Thanks.